Good morning and welcome to this CEFC Green Room on Measuring What Matters, an approach for natural capital investors. My name is Melanie Matters and I'm a director at the CEFC in the Natural Capital Investments team, and I'm going to be facilitating the discussion today. I'd like to begin by recognising that over countless generations, Aboriginal and Torres Strait Islander people developed an intricate understanding of their country's unique environments and ideal ecological balance. By taking this moment to celebrate the interconnected and enduring relationships between Aboriginal and Torres Strait Islander peoples, plants and country, and ongoing land management and sustainability, it connects us today with our discussion on natural capital. I would like to pay my respects to the traditional custodians and elders past and present of the Gadigal people of the Eora Nation, where I join you from today, and extend that respect to the Aboriginal and Torres Strait Islander people throughout Australia, and in particular, First Nations peoples joining this webinar. Today's session will run for 45 minutes. We'll have a discussion with our two panellists, Hee Chung Sung, Head of Natural Capital at CEFC, and Brad Wheaton, Co-founder and Managing Director of Gunn Agri Partners. There is time at the end for Q&A, so please submit any questions through the chat box and we'll get to them at the end of this session. There will also be a short survey at the end, and we would appreciate if you could take a moment to complete that. I will start us off with a little about natural capital at the CEFC, and then we'll step into the panel discussion. Natural capital is one of three strategic investment priorities for the CEFC, and our strategic priorities recognise the urgent nature of the emissions challenge and CEFC's important role in anticipating and responding to market conditions. Australian agriculture is an $80 billion business conducted across half of our landmass, with diverse enterprises delivered via large-scale, multi-site portfolios, location-based aggregations, and smaller-scale family farms. Within the broader natural capital asset class, agriculture and forestry continue to be crucial to the Australian economy and to Australia's emission reduction targets. Over the past decade, the CEFC has committed more than $440 million to the agriculture and forestry sectors. Our investments range from large-scale investments in specialised funds, notably across the cropping, livestock and forestry sectors, to providing discounted finance for smaller-scale agricultural production. And increasingly, the CEFC is focusing on carbon sequestration opportunities in the agriculture sector. Natural capital is an investable asset class, and what we see through our investments is strategies that reflect both the complexity and particular urgency of improving the sustainability and competitiveness of the Australian agriculture and forestry sectors, and that done in conjunction with measures to regenerate and improve land, water and biodiversity. And I know that for the CEFC and for the institutional investors that we work with, credible, comparable and reliable metrics are a foundational element of our investment decisions. So on that note, I'd like to bring Heech in. Heech, in your role as Head of Natural Capital, you lead CEFC's investment strategy across agriculture, forestry and broader nature-based solutions to accelerate and contribute to the decarbonisation pathway for Australia. And CEFC plays an important role in convening capital and establishing and promoting best practice approaches. Could you take us through the Measuring What Matters report, and in particular, why the CEFC and CDPQ saw its development as a priority?
Thanks, Mel. I think an important fact I just want to highlight is that we've been investing, CEFC's been investing in this asset class, for almost a decade now. And with $440 million worth of assets under management and capital at the door, it was really important when I joined the organisation that we could assess, what good actually looked like for this asset class in terms of an emissions reducing strategy. And it's fair to say that our investments were providing great reporting, but the reporting was really hard to dissect and discern and consolidate to actually just compare across our strategies, across our investment managers who were, performing better. And you would know more than anyone else that what drives investments and what drives investors is foremost data. Like, data is super critical. And so we would see a lot of great anecdotal stories about what they were doing on the assets. And we hear it all the time in the market. We hear it from landowners, smaller landowners as well. But if you want an asset class to be investable, you have to have a robust set of data so that you can base your investment value proposition. Because what you want to be able to do is essentially use that data and to improve on that data year on year. So the idea of this report, and it was really important for us to have CDPQ's involvement because of their global footprint, was to really identify the core metrics that drive emissions down on agricultural assets and forestry assets, but also where there was opportunity to sequester carbon. How do we measure those? And so how do we look across our asset class, across multiple different commodities, consistently? That was really what drove the prioritisation of the.
Fantastic. And excuse me, that's a great introduction then to bring Brad into the conversation. So I'd like to introduce Brad Wheaton. He's the co-founder and managing director of Gunn Agri Partners. Gunn Agri manages a portfolio spanning agriculture and natural capital assets covering 2.6 million acres and $800 million in assets under management. Brad, could you tell us a little bit more about Gunn Agri, but also the role you see for consistent metrics like this?
Yeah, Gunn Agri Partners is an investment manager that really focuses on managing agriculture and natural capital assets.
Right now, Brad.
Sorry, Mel?
Not at the moment, just...
Brad, start. We're having technology issues.
Okay,
Maybe
sorry, just checking. Can you hear
while
me?
we get Brad back online with his audio, Heach, would you like to talk a little bit more perhaps in detail about the report?
Yeah.
In particular, the focus, I think, around the sectors, the activities and the investors that this report was focusing on?
Yeah. So as I mentioned, the involvement of CDPQ was important because we didn't want this to be just an Australian-centric metrics report, because natural capital assets globally are underpinned by very similar attributes. So the impact to soil health, water efficiency, energy efficiency, and the kind of production systems you want to deploy into those land assets is not that different market to market. So having a set of metrics that could be replicable to other investment markets was important for CDPQ. And so when we devised, thought about how do we put this metrics together, we had that in mind as a key focus. So global applicability. And so a lot of the global frameworks like the greenhouse gas emissions protocols, climate bonds initiatives, they were all considered as part of the report. But importantly, this is designed for institutional investors in mind, because, as I said earlier, institutional investors want credible data. They want data that's meaningful but simple enough and feasible in the way you can collect data without costing too much money. So the metrics has a feasibility rating. So it talks to not just the scientific information that's available to extract from that particular asset, but it's how feasible is it to collect that data. So based on the rankings, you get to a priority of what activities that you want to measure across broadacre farming, across livestock, and across forestry. So they were the core asset classes that we approached because, of course, there's myriad of agriculture production assets that you could look to, but we focus on those that we've invested in and that investors like CDPQ are also investing in.
Makes sense. I think we have sorted the technical issues. So, Brad, if we could jump back to you, hear a little bit more about Gunn Agri and the role you see for consistent metrics.
Sure. Thanks, Mel. So Gunn Agri Partners is a manager of agricultural and natural capital assets for institutions in Australia. So what does that mean in practice? It means we run farms and we run the landscapes in which we operate in. So there are very, very few farms that are purely agriculture. There is, in almost every case, an estuary, a river, a creek, or an area of remnant bushland. And there is always the opportunity to change the carbon impact of your operations and the way that you manage the land. So that's what it means to us to be a manager of agriculture and a manager of natural capital integrated with that. And so where we see the role for natural capital metrics is a really important one for a whole range of stakeholders. And as an investment manager, a really important stakeholder for us are the investors. So the investors want to be able to compare between their different investments. They want to be able to compare to us as a manager and our contemporaries. And we also, as the manager, want to have a consistent measurement framework that we can use to communicate, whether it be to our employees, to the broader community, and of course to our investors, around how we're performing against what we're setting out to do. And so the fundamentals of our metric system and of the system that the CEFC have released is that there are objectives that are set, there's a framework for measurement, there's a reporting piece, and there's a piece around the integrity of that information. And we see a huge role for this in the management of agriculture and natural capital assets moving forward, because all of those stakeholders that I mentioned are calling for more transparency and accountability in managing those aspects of what we do.
Yeah, thank you. Yeah, I think that's a really good observation about sort of the different use case for using the metrics as well. And it's not just about what investors are after, but also about telling the story and also for your employees, as you say. And so in terms of the Measuring What Matters report, how do you sort of see using that in practice and sort of folding that into your business operations? Because you've got, lots of assets under management across different jurisdictions and regional areas. Be interested to hear your thoughts on how you're going to put it into practice.
Yeah, and the Managing What Matters report is a great lens on a set of metrics that are general enough to be applied to whether it be a cropping operation or a livestock operation, or maybe even a timber management operation, an operation that includes maybe livestock and cropping, but it's granular and specific enough to actually help the management actions have meaningful targets, and then for those measurements to be reported on effectively. And I guess the evolution of reporting on sustainability or natural capital has been moving from selective reporting and identifying good stories to where we are today, and what is largely achieved in this, what is achieved in this natural capital metrics the CEFC has released, is what are the things that are the most important? What are the things that as a manager you have to report on, so that you can communicate to your stakeholders the full picture, not just the picture around the good things, but the full picture. And that's what we see, is that this report lists out the key metrics, and to then use that as a framework, you are then accountable for all of the metrics that apply to your particular operation.
Yeah, thank you. That's a really good point, and I think it's a good opportunity then to actually ask Heach from the lens of, as an investor, with that shift towards what institutional capital are requiring in terms of seeing metrics and reporting on these sorts of indicators. As an investor, what do you think are the key things that are needed in a natural capital strategy to attract capital?
I think foremost, investors are looking at an investment on a risk-adjusted basis. It's not just about the broader environmental outcomes. They are looking at it as a return on their investment. They are managing money for mums and dads, so it's super critical that they are getting a return for that. So if you think about it simply from that perspective, and if you take, and some investors will take a portfolio approach to investments, not all, but many do, pension funds do. So you need to then, investors are thinking, where does this fit in the portfolio of investments I have? And so if you're thinking about the key things that a natural capital strategy needs to articulate to an investor, it's the risks around managing the things that are, can cause issues with your investment. So the opportunity for investment is clear, right? The macro themes around growing population, needing to consolidate, needing to be more efficient with food production is absolutely clear. We have a finite resource base, an aging farming population. These are all fantastic opportunities to invest. So the strategy that investors need to address are the key risks around seasonal variability. How are you as an investment professional going to manage the key risks around that? How are you going to manage the operational complexities that you will face on those assets? How are you going to be efficient in managing that? How are you going to be competitive? And of course, how are you going to invest in the right people to manage those assets? And overarching all of that is the climate theme, the nature theme. So it's a specialised skill set you need as an investor, but also if you're an asset manager, you want to showcase those special skills in order to attract that capital. So what we're looking for are strategies that address all of the opportunities, but also how are you going to manage those key risks to drive the value creation that we need from these assets. So I think, there's a lot of data around investment performance that investors can diligence, but there's very little information that's clear, consolidated, simple enough to assess whether or not that particular strategy can, extract the best value from an emissions reducing strategy. So we are hoping that this report and the metrics that we've created as a starting point will help in that diligence process.
Great. I'm conscious that in the report it mentions other frameworks that are available and commonly referenced. So how does the CEFC Measuring What Matters report fit in with those other frameworks that are already in existence?
It's a good question, and a really important point to note is that we haven't reinvented the wheel. The design of this report was not us sitting around the table, creating a new set of metrics from a science perspective. What we've done is we have said, what do we need to see to compare our investment strategies, on our investments? And then we've engaged a consultant to look at all the different global metrics and local metrics that are relevant to what we're doing, and to unpick those and to ensure that what we've put together is at least consistent and not in conflict with those metrics. And in some cases, if you start using these metrics as I guess a starting premise of how you might start to measure performance, you can then feed into those other frameworks that might be more specific to your organisation's needs. So the key takeaways are, we are not reinventing the wheel. But what we've done is to consolidate it in a way that makes sense for institutional money. And it's designed to be flexible, so to evolve with science and with technology over time.
Yeah, fantastic. And I think it'd be interesting, Brad, if you've got any observations sort of on that same theme around, fund, managers like yourself are used to reporting on fund and asset performance. And now with a lot of attention on climate, nature disclosures, what are your thoughts on how this will progress in the coming years and the sort of use of things like the Measuring What Matters report in conjunction with some of those other frameworks that are emerging?
Yeah, we have observed in the industry a real push towards adopting similar objectives, and a part of that has been that there's been a lack of direction around what are the appropriate frameworks that investment managers such as ourselves could follow to provide that accountability that we spoke around before, and the transparency and accountability. And one of the things that Gunn Agri has implemented in its journey is, in the absence of really having a report such as the Natural Capital Metrics report that you've released, in the absence of that, is working closely with our investors on a bespoke framework. And it has largely been a set of metrics which are very similar to the Natural Capital Metrics you've released. We thought it was important to work with our investors on what was important to them. Some of those metrics were drawn from the UN SDG goals. Some of those have we've drawn them from other metrics, whether it be UN PRI guidance, and we've also monitored a lot of the other certification schemes that have been implemented. And what we've found is that there's a real barrier to entry with a lot of the sort of closed club certification schemes. And what was really required was a transparent set of metrics that could be communicated to the whole industry, and those participants could choose to pick them up or not. And what we see is increasingly investors saying, well, to the investment managers, well, what is your performance against these particular metrics? And so it really gives a solid yardstick for all investment managers to report on, or it's a really difficult conversation to say why you're not.
Yeah, I think that's a really good observation as well about the what you are or what you aren't sort of looking at. Thank you for that, Brad. We hear a lot about measuring impacts on biodiversity and targeting nature positive in the natural capital space. Perhaps for you, Heech, do these metrics cover those aspects?
Not as a primary focus. And the reason for that is CEFC is an investor that decarbonises key sectors. And, you know, we invest in energy transition and obviously hard to abate sectors. Our investments in natural capital really focus on, you know, how we produce more with less emissions. How do we potentially add better carbon outcome to our investments? So the metrics are really designed to focus on that. But you will see from the metrics that actually a lot of the activities that serve a better carbon outcome is complementary to a better natural environment. What we haven't tried to do is, you know, create a report that sort of hits every single complex environment. So the natural landscape environment is highly complex, and we're not going to be foolish enough to say we've come up with metrics that you can measure the biodiversity outcome for all the regions, all the different agroecological regions in Australia, let alone the world. But what we can see is that by progressing some of these decarbonisation outcomes on your land, including better soil management, which of course means more water efficiency, you will end up inevitably with better natural, a better natural environment. So that's what the report is about. But you know, you can probably the next, if you're a I don't know, progressive investment manager, you may be able to then leapfrog into a broader environmental measurement proposal, but that's not what this report is designed to do.
Yeah, it recognises that that you're operating within a land management system and that it is an ecosystem. I guess the report does provide a handy list of metrics and activities, and probably one of the questions that I expect the audience and people are interested in is how to actually implement those in practice. I wonder maybe, Heach, if you want to start with, how does CEFC propose to get consistency of measurement across its managers? And then perhaps, Brad, I'd be interested in your thoughts on how you see implementation of it in practice.
I think for us, as a baseline, we would like to see our investment managers reporting on these metrics, and we've already started that engagement and that process. And bearing in mind, in developing these metrics, we sought broader feedback from investment managers globally as well as locally to better understand their current practices. And the idea is it's not a set and forget. These assets are not set and forget. We are an investor for the long term in many of these investment strategies. So we need our investment managers to be ambitious, to set targets. So we will be seeking year-on-year targets and reporting based on those targets. And, some years will be good, some years might not be so good, depending on the weather. But that kind of data that we will see across our investments will really help, I think, direct where further investments and further technologies may be needed in the future. So that's how we're planning to utilise this report.
Yeah, great.
And from our side, Mel, what we do is in the establishment of our investment platforms, look for opportunities of capturing the information alongside our operational and production information. So that might be in our soil testing, which has both agronomic and also sustainability measurement benefits. We look to extract the synergies from the setup of the way that we do due diligence on assets, and then how we monitor those assets over the different production cycles. So that's one approach that all agricultural practitioners can actually adopt, because agricultural practitioners are constantly monitoring the environment that they operate in and looking for the synergies of what's important production information to capture and what's important information around the natural capital or the sustainability management practices that are involved in that operation. That's one example of how we're implementing. So that's an example at the implementation stage. In terms of the overall framework, we incorporate the planning for collecting this information and also the reporting alongside our annual financials. And we also incorporate an assurance piece around that as well, where we have an audit of that information to give our stakeholders confidence in that information. So it's looking for the opportunities to make the implementation efficient, because these additional work does often require additional effort and additional cost. Looking for the efficiencies to do that and then incorporating it alongside your other reporting practices is a really effective way of being able to take this approach and put it into practice.
Yeah, thank you. I think that's really helpful just to hear about how someone like Gunn Agri is actually approaching it and how to actually implement in practice. I think that's quite a useful perspective. So thank you, Brad. Conscious of time, we might start to move towards some of the Q&A that we've been receiving. So thank you for popping your questions in the Q&A box. I'm just going to go through and have a quick look at that. To expand. Okay, we've got one question here, which is, I might ask you, Heach, to have a think about. Is it possible that producing another set of metrics adds more confusion to the reporting and disclosure space or at the moment? Or is it simply not needed?
Yeah, that certainly wasn't intended for us to confuse the market nor CDPQ's position. And I guess on face value, and the many reasons why people are on this webinar is, yeah, it feels like another set of metrics out there. But you can glean from the report that what we haven't tried to do is to produce a new set of metrics that are inconsistent or different from those that are already in the market. So what we, as I said before, what we've tried to do is to take those key metrics that drive an emissions outcome, a better emissions outcome across core commodity sectors that we've invested in, and I guess put an investor-focused lens on it so that we're looking at what might be important for large capital like the likes of CDPQ and others that we've conferred with in coming up with this report. So it is not so much, here's another report, use this. It is a suggestion for institutional investors in particular. If you haven't got a consistent set of metrics that you're measuring your investments across, this is a really good approach to doing that, because it takes into consideration probably those sustainable reporting initiatives they've already implemented. But it's really focused on the key drivers of decarbonisation. And as I said before, those activities will generate a better environmental outcome. So that's the design of this report.
Right. I've got a question here about, there's a question about how do you see these metrics feeding into sustainable finance taxonomies in the future?
Well, that's a really good question and quite timely, because we have been engaged with ASFI on their development of their taxonomies and how we can help by the work we've done on this report to feed into that process. Obviously, taxonomies are designed very specifically for a particular market. So, you know, again, this is a great thing about this particular report, is that it can start to focus on the key taxonomies for the financial sector to develop more granular reporting requirements if needed. So we are engaged with ASFI on that, and we're very excited about that process.
What is your assessment of farmer willingness to lift sustainability as part of the climate change agenda? And is there a genuine interest in these measures, or is it all a bit too hard? Perhaps, Brad, could you speak to that question?
For sure. I think you've seen some evidence in farmer engagement in the carbon methodologies that are available today, and you'd have to say that has been very strong. If you look at the take up by the opportunity set of who could take up, for example, savanna burning in the north of Australia, the uptake has been very high. The uptake of other methods has been quite high. So where there has been the more advanced end of the policy spectrum, and carbon has certainly been more advanced than, say, biodiversity, there has been a really solid level of uptake, we think. Certainly not too hard, but it's a broad industry with different players, and some players are more reluctant to engage, and other players are extremely proactive and have been incorporating a lot of the actions that are flagged in the report here for many, many years. So it is, on the whole, we're seeing farmer uptake being very positive.
Yeah, thanks. I think that's a good observation, and also to recognise it's not a one-size-fits-all answer for this sector, that it is large and diverse. There's a comment here in the Q&A chat box about suggesting that the metrics will continuously evolve for some time. Be interested in your thoughts, both of your thoughts on that comment and observations.
The short answer is, of course, but let's not be let's be realistic about what this asset class does, right? This is land, trees, or vegetation, and soil, obviously on land and water. Those things won't change. Those assets, are what we're investing in. So, what drives better environmental outcomes? What drives emissions outcomes are clear. They won't evolve per se over time. What will evolve is how we measure it, how more concise can we be? What are the tools that will be made available to measure it more readily? And, you know, maybe there are other aspects of the soil condition we haven't addressed that, you know, the scientists will discover over time that we should be measuring. But, you know, to be absolutely blunt, the metrics have been designed on science that's been around for a very long time about what actually really impacts the environment. So I think whilst technology and you know, the sort of the metrics around what you might measure will evolve over time, fundamentally what actually matters on the asset is pretty well known. Yeah. I don't know if Brad, if you have any thoughts on that.
No, maybe we can give a practical perspective, which you raise an excellent point, Heech, which is what will change over time are the tools and the methods for being able to capture this information. So this activity has a cost, as we flagged before, and any efficiency that you can capture in recording information, reporting information is only going to enable more of the industry to take it up. And so what we see in our methods for capturing a lot of the key information today is that we're looking at how is there a tool that we're already using in our production monitoring that can also tell us a story about natural capital and sustainability. And so what we will see over time is, as we have seen, you know, take soil testing, for example, which was largely a physical sample sent off to a lab, usually a long way away, quite a lot of time before getting those results back. What we have today is a whole range of different soil assessment tools, a lot of remote sensing tools that gives us really valuable information. And overall, that makes that process a whole lot more efficient. So if we see a lot more of that in the future, it will make participating in a framework and adopting these types of frameworks a much more achievable and accessible opportunity for many farmers.
Yeah, thank you. Yeah, interesting to see at the point we're at and the shifts that are coming as well to support more of this reporting. There's a question here about Australian agriculture has always competed for global market share and has been very successful. Where do we stand in comparison with other major producers in terms of sustainability? Are we competing well in this area, or are we at risk of being left behind? And how do you see the metrics helping there?
Yeah, it's a big question, but I guess I would say I've always viewed Australian agriculture production systems as highly efficient compared to some of our global peers. The opportunities in Australia present very differently to other markets. For example, a lot of our land you can own freehold. You can't do that in many other markets. The average size of our assets are far greater than other markets, so you can get larger land exposure quickly compared to other markets. I think on a per unit of labour basis, we've been incredibly efficient as a nation for a very long time. So what's going to drive efficiencies and better productivity in the future is technology. It's technology, innovation, and rethinking what you produce on your assets. And so we're seeing that play out with certain producers. And I think the more we do that, we will become more and more leading in this area. But to Brad's earlier point around the cost of measurement, you know, part of the metrics is designed, there's a metric on feasibility, and that captures cost, you know, being potentially prohibitive with the tools that are available in the market. So the way you know, traffic light the metrics is working out how important that metric is given the feasibility of that particular, capturing that data. And hopefully that will change over time. But the real opportunity here is that accessing markets, certain markets, and we've seen the European market being very, very proactive in selecting, you know, or putting a barrier for certain markets to come into for exporting into that market. I think there is also a cost for inaction. So we need to weigh that up. We can't just wait for the perfect set of reports, perfect set of metrics. We have to start acting now. Otherwise, it'll be too late. We need to move, and hopefully these metrics are designed so that the actual activities on the land can be prioritised.
Yeah, I think that's a really interesting point. And maybe Brad, we'll ask you for your thoughts on that. You've talked about sort of the cost of implementing, but also the need for this sort of reporting and for stakeholder engagement and information. How do you see the cost of not acting in terms of productivity, resilience, sustainability?
Yeah, and it's interesting. Where is Australia in the context of adopting this? Maybe we started a little late. It doesn't change the clarity that we have around the importance of taking this action now, and I think it's recognised that the farming sector has adopted many of these practices for a long period of time, but it hasn't been consistent. And what this does is it lets us, starting with the institutional managers, it lets us have a consistent approach to communicating with our stakeholders around what is happening in terms of carbon over time, what is happening with biodiversity and all the other sustainability and natural capital metrics. And that is going to be something that is increasingly a part of the regulation of the industry. So whether we started too late or whether we were ahead of the curve is less important than what's our view on where we need to be in 5, 10 or 20 years? Do those align with our overall objectives as a country around our climate commitments? And so our business does have the view that it is clear that we need to be adopting enthusiastically, not just because our investors are asking us to, but it's because where the industry is very much heading.
Yeah, thank you. And I think we probably have time for one more question. Appreciate the report is aimed at institutional natural capital managers. Can the metrics be used at the smaller scale farming operation? So we've touched on it a little bit already, but it might be useful just to sort of step through that again.
Yeah. The report is designed for institutional investors because, it is to assess performance across a broad spectrum of the investments that investors have made. But there is no reason why a smaller landowner can't pick up this report and work out, actually, I've probably got this data. It is manageable in that way. And I think for more progressive farmers, they could potentially use this as a good framework as a start, because it lists the kind of tools that are available, and as I said, it lists how feasible that is. So it's a starting place, definitely, for all the landowners to be able to potentially look to.
Yeah. And Brad, do you have any observations on that question around the transference of it to smaller scale operation?
Absolutely. Many aspects are transferable, and that's one of the reasons why we've stressed on this webinar today is around looking for those efficiencies, because many of the smaller operators that maybe don't have the resource capability that the institutions do would already be collecting a lot of this information, and it's looking at that information with a different lens and perhaps comparing it over different time series, instead of using that information for whether it be soil amelioration decisions or fertiliser application decisions. They're looking at longer term cycles, and that information should really help build a better picture around the natural capital and sustainability status of their assets.
Thank you. That's, I think, a great way to wrap up our Q&A and this webinar. So I'd just like to thank everyone for joining and for the excellent questions that came through on the chat. And of course, I'd like to thank Heach and Brad for your insights today. I think a common theme coming through was around comparable measurement to support investment and activities in the natural capital space. And we do hope that our Measuring What Matters report can assist others in the natural capital sector and those looking to get into the asset class. The report is available to download by clicking on the link on your screens right now or visiting cefc.com.au, where there's also a reporting template for metrics available called the CEFC Tracker website worksheet. So on behalf of CEFC, I'd just like to thank you again for joining the webinar, to Brad and to Heach, and please do reach out to either Heach or myself if you have any further questions on CEFC's natural capital investment focus. Thank you.
Thanks, ma'am.